Day 10. How to identify trend reversals and swing trading. What's up? It's your boy Zay. Welcome to the Black Market Academy. We about to be breaking this down. Trend reversals and swing trading? What? Let's get into it. Oh, we hefty. Recognizing trend reversal patterns. Trend reversal patterns indicate that a prevailing trend, either up or down, may be coming to an end. Head and shoulders is one. Double top and double bottom is another. And triple top and triple bottom is another. You can read that for yourself. I'm about to show you on the charts because it is better to show you than to talk to you in your face. All right. Head and shoulders. Now, these are usually rare. Okay, here we go. There we go. Head and shoulders. So, head and shoulders is usually something like, I don't really see a good. All right, we got double top first because double top is one of them. So, double top and double bottom. These is easy to see. All right. Double top is simple. This is double top. It came up here, hit, bounced down, came up here, hit again. That is a double top. Simple as that. Another double top is here. Double top, came up, boom, came, hit it again. Double bottom, simple. Came down, hit this level, came up, came down, hit this level. Well, this double bottom, but as you can see, the double bottom actually turned to a double top. So you really could have played the. And as you can see, I literally just made support and resistance lines on this chart. And if we wanted to sharpen up just a little better, I could have dragged it here. So literally, you could have seen the double bottom. You could have brought it up to this top. You could have sold it down. Probably wouldn't have made money if you had your profit targets here, but you would have came back up here, sold it down again. You seen this is double bottom, so you bought, rolled it up here, so you would have made some good money just off using double tops and double bottoms. It's pretty interesting, actually. Well, you would have actually waited for the double to happen, so we wouldn't have even sold here. We would have waited for it to show the double, sold here, and then brought it here, and as you see, this became a double bottom, so we brought it back up, which would have been a beautiful trade. You could have held on that for a long time. That ran. That's just, yeah. When you got to drag the screen, yeah, you know that was a good trade for sure. Yeah, when you got to drag that, yeah. Head and shoulders and triple top, triple bottom. So triple top and triple bottom is pretty much the same thing. You're just looking for three bottoms. So you kind of see it here. You can say this is a triple bottom for sure. Bottomed out, triple bottom. That's perfect. But you usually want them to be a little closer, so we're not going to really count that as a triple bottom. This is kind of more like a triple bottom. So boom, 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 something like that. Or like this is double. Like this is triple bottom. This is almost no. It's not an inverse head and shoulders. I can't even find a head and shoulders. All right, we can say this is a head and shoulders, right? Kinda, in a way. Okay. So this is like what you would consider a head and shoulders, right? So you got the shoulder, the head, and the shoulder, right? So usually you want the neckline to be where you short it. So something like this, right? So you got the shoulder, got the head, got the shoulder, and when it broke below, like this is a strong break, then you take it down. But it's just not as clean. Usually, the cleaner the move, the better the trade is. This is like another head and shoulder kind of example. Oh no, perfect. Here we go. Here we go. Here we go. This is a longer one. All right. Shoulder, the head is higher than the shoulder is about equal distance height. So this is perfect. This is a long head and shoulders. Okay. So we want to put the break point basically like let's just say down here for it. The swing, the low is low. So as you can see, the shoulder, head, it kind of came down a little bit. You really wanted to bounce and make another shoulder here. But after it did that, that would have created this little neckline thing here. And then you would have just shorted when it broke. So as you can see, it broke here, shouldered it, it bounced up. You could have waited for the retest to short it again, which would have been right in, let's see, here. Depending on where you stop loss. You do a swing high, then you would have waited and you would have actually made money because it came all the way down. So that's a head and shoulder. Those come up a little rare depending on the stock you're looking at, but that's another chart pattern that I don't use, but that's a thing for sure. Okay, candlestick patterns for trend, and the reason why I don't use that is because all of these things are discretionary. Like I said, I just don't like discretionary trading systems. I like algorithmic. Oh my god, I can't even say the word. I think I said it, I don't know, whatever. But I like algorithm trading strategies. Let me just say that, Jesus. You know what I'm saying? But yeah, so you got engulfing patterns. You got the hammer and the hanging man. The hammer and the hanging man, I can show you those, and I can show you the door. I can show you all of these, actually. Oh my god. I'm going to show you those too. And we just not go lock into that because we got to keep coming out here. All right. Easy money, easy money, easy money. All right, this is a doji. A doji is when a price opens and closes right next to each other, but it has a long wick on both sides. It's about the equal height. So this doji means that price doesn't know if it wants to go up or down. So it just goes sideways. As you can see, the doji Price went pretty much sideways. Another doji, price went pretty much sideways. So this is consolidation. Usually when you see a doji, this is consolidation on a lower time frame. As you can see, price traded in this box. It didn't go significantly up or significantly down. That's a doji. Shooting stars usually happen at the top of a reversal. So as you can see, price came up. We got the shooting star. So I love to get in shorts on a shooting star. So say for instance, if we had support and resistance like here, boom, it's perfect. Get you out the way so we can be a little clear here. So as you can see, we rejected shooting star here, and then it sold down. Another shooting star here, kind of like a doji shooting star, whatever. Shot down again. This one rejected this, shot down again. I wouldn't have took. First of all, I wouldn't have took this trade. Just letting y'all know. Really, I like to see a white candle close, or like a bearish candle close, but this one wouldn't have been a bad one. So as you can see, this is a shooter. So the shooter is, it opens, it shoots, goes all the way up, but the demand is so high in the zone that it shoots it all the way back down and closes here. That is a super duper heavy reverse. As you can see, another one here, another one here. And yep, that's one. And then a hammer, here we go. A hammer is here. So usually I like a bullish handle, right? My white candles are red candles and my black candles are up candles, just letting y'all know. But this will be a hammer candle, but a stronger hammer candle will be like this one. So this means that price opened and dropped down, but buying pressure was so strong at this level that it shot it back up and it closed high. That's a strong hammer candle. This is kind of like another one, but not really. This was that one's an exhaustion one. So this one, and context matters. So you usually want to see them at support level. So if we were dropping down to a support level and we see the hammer candle and then roll it back up, that's different. But if we're going into a resistance and we see a hammer candle, that's usually a sell signal, as you can see here. That's sold off. So it just depends on where you're seeing these at in context. So like usually we coming down to a support level and you see a hammer, which I can't find one. Here we go. Boom. So we're going up. We came back down to, and you see how I'm going across the support level, right? I'm not. We doing this live. I'm not cutting, editing, and all that. You see me. I'm literally just scanning the support level to look for a hammer candle because this is the law of trading. So this is a beautiful hammer. That's like that. That's picture perfect too. So we came up. We broke this level, which came back from all the way over here. As you can see, rejected. So we came up. We bounced back. We made a perfect hammer candle. So this is perfect textbook entry for Zay. Zay loved this. This is perfect for me. I love this. I don't get better than this. The perfect hammer candle. The stop loss is here because look at it. Entry here, and then you run the trade up. It's that simple. That is a hammer candle. All right. Next. Divergences, MACDs. You got the bullish divergent and the bearish divergent, right? So, okay, divergences is if the price, and these happen rarely, right? These happen a little bit rarely. But say for instance, if we can actually turn, we can actually turn on divergences for RSI because it'll make it a little bit easier to see them. Calculate divergence, right? Okay. So the divergence is this, right? So if we see that the RSI is making lower lows, but the stop price is moving higher, that is a divergence, right? Same thing with like the bullish divergence, right? Okay, so boom. And it signals reversals. So if we see that overall the RSI is gaining, so overall it's slowly increasing. I mean momentum is increasing because RSI is a momentum indicator. So if we see that momentum is increasing, but the stock price is decreasing, that means it's basically is exhaustion. So when we made this low, we can see right here and looking for exhaustion, which means that the price is about to increase up, right? And look what it did. So we got this and then it increased. A bearish divergence, so overall we're making lower highs on momentum, which means that we should be looking at a downtrend. But if it's going up, we could expect a down move, which it didn't work. Divergences are pretty strong, but they ain't the best, of course. I don't like to trade like discretionary, of course. It's not as discretionary, but it's still kind of like this candle count. Does this candle count? I don't got time for that. We don't have time for that. This is a good one though. Price moved up from this point to this point, but the momentum was going down. And what did it do? It went down, so that was a good trade for sure. The bullish, it kind of was equal distant, but overall it was a bullish, so we obviously we went up. You can just literally turn it on and try to trade if you want to. Bull, so you go bull here, you buy here, perfect. You would have bought literally at the bottom too. Like it happened every once in a while. You buy the bottom every once in a while. You roll it up to like what, a swing, this little consolidation area, made you some money. Bear, you get in to this consolidation area, you would have made you some money. Well, actually, would have shorted it here and run down to this consolidation. So that would have made you some money there. This bullish one here, you would have got in on this candle and lost money, depending on what your stop loss is. Then you would have got in here, and then if you roll it up to the swing high. So it just depends. That's why I say risk management is important, because everybody's targets and everybody's risk management is going to be different. So a winning trade for me might be a losing trade for you, and a winning trade for you might be a losing trade for me. So, man, trading depends, bro. You take the chart and you do what you want with the chart, bro. Everybody different. I could be long and you could be short. We could both make money, dog. So, that's just how trading works. That's really how it works. Okay, volume plays, volume spikes, low volume. Okay, so we can look at volume. Let's add volume. Usually, when you pull up your chart on TradingView, this is TradingView, by the way, TradingView.com. So you can look at your charts. We got what this is, volume. Let's get it. 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 Oh my God. All right. Regular volume. That's all I want. Okay. Now, as you can see, we have volume on this chart for the most part. This is Verizon, so let's look at something like Tesla, because I'm about to show y'all something right here, right now. Let's go to let's just reset this chart view. Okay. Let's look at Tesla on a daily chart. All right. As you can see, sometimes the volume price is has dead points. So you see, Tesla was consolidated for a long time. Wonder why? Usually they say when you consolidate, you're getting ready for a big move that is usually as long or half of the consolidation or twice as long, something like that, something along those lines. So as you can see, low volume. The volume was low because people were just slowly buying in. It's consolidation zone. Then boom, volume increased and it took off literally. Then it dropped back down. I remember around this time I watched Tesla heavy back then. Then it started to decrease. Then we started to get light consolidation in these little areas, and it just popped up. And then this Trump thing happened, and then pop, 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 pop. And now you see we're consolidating, and volume is low again. So volume spikes. Usually when you see a volume spike, that could mean exhaustion, or like a huge thing, something huge happened. So usually like on this day, something probably huge happened in Tesla. If you can go back, look at the news, something huge happened that day. This volume spike, usually just the highest volume you see within that time period. Like here, this is exhaustion, so people sold off here a lot. As you can see, obviously, why would people sell off on this candle? Why? Okay. You got highs here. So we got highs. Hold up, I'm gonna show y'all something. We got highs here. We got highs here. We got highs here and here. So we was connect all our highs here. They touch here, touch here, touch here, touch here. Would you look at that? Why did Tesla sell off on this day? Because it was at a high. Let's go. Trading is not hard, man. It's not hard. It's not hard. I'm telling y'all, it's not hard, bro. It's not hard, bro. It's common sense. You can't be afraid, All right. Okay. And using technical indicators to confirm reversals. Technical indicators help traders confirm the potential for trend reversals by providing additional insight. Okay. Momentum over bar oversold. So we looked at RSI, we looked at moving averages, and we looked at the moving average converted diverted, which is the MACD. And we looked at the moving averages. So all of these are actually on our chart right now. Oh, we don't have to hit this. Okay. So these are used to either confirm trends or reversals. So if we come here, all right, all right, let's look at this, right? So if we were just to look at a regular simple trading strategy, right? Okay. We got this buy. Now, like I said, I don't use these, but we're just gonna make up some rules for it. If I was to buy this, and I want to at least see momentum starting to go to the upside. So we see those are red, which means momentum is going to the downside. Now this lighter candle means momentum is going to the upside. So I see this buy candle. It's a strong candle. It's a beautiful candle. Momentum starts to go to the upside. We just came from oversold, and we have more volume in the buy pressure than the previous days in the sell. So what do? We buy, and look, it's a beautiful trade. Come back here again. We get a buy signal. The buy signal, the MACD is green and increasing, so that's a good thing. Now we are oversold, which is why I don't use this. But you might be like, well, Zay, I don't want to get in oversold. I don't want to get in when it's over. I want to get in when it's overbought. I want to get in when it's oversold. Well, that's you. But you would miss out on a crazy trade. So that's the thing. Now you can look for sales, right? You just want to pair all of the indicators together to give you the strongest signal better. But I would just rather have me one confirmation signal, one entry signal, and just trade it and run it all the way down. retest it, run it all the way down, buy in, run it all the way up. It's just way simpler, way easier, a lot more money made that way. I don't want to take 100 trades a day. I want to take one trade a month, make $1 million instead of taking 10 trades and making 100,000. Do you want to take 10 trades and make $1 million? Would you want to take one trade and make $1 million? You tell me. You let me know in the comments down below, baby. Black Market Academy, that's day 10, y'all. Appreciate y'all for tapping in. See y'all on the next one.